what are we going to do in this 40 minutes? Basically, we are going to look at the roles of procurement and finance. We'll do a quick recap on that, and then the potential areas of overlapping interests and conflicts. We'll look at some of the examples around those. And finally, we will look at some of the best practices in integrating procurement and finance. Okay, this is where we are talking about moving away from silos and working towards synergy. All right, so let's start off with a short poll. Okay, so I would like you to answer. I'm going to launch this poll in a few seconds. Okay, the questions are very clear. There are two questions that I would like you to answer. What are the key words that come to mind? Okay, when we speak about the procurement and finance functions. Okay, whatever keywords. So you can type in one word or two words, but whatever are the keywords that come to mind when we speak about the procurement and finance functions. Okay, so this will be launched onto your screens in a few seconds. Give me a few seconds. I will do that right now. There you go. Okay, so you have a few seconds to write in your answers. Okay, type in what are the words that come to mind. So the first part is on procurement and the second part is on finance. And while you answer this, I will also have to say sorry. There is a couple of colleagues of mine who are there behind the screen, Fred and Eric, who are also helping me in organizing this. So if you have any technical issues, you can drop in a note in the chat, and they'll be able to solve. Okay. So you can start typing in your answers whenever you are ready, and click on submit. So there's a submit button at the end of it. Okay. I see that you're typing it on the chat session, but if you can do it on the poll, yeah. Let me see. I can view the poll. Okay, I can see savings. Okay, I'm just reading out some of the answers that I'm getting. Savings for both of them. Yes, indeed. Buying, external spend. We talk about value generation. Okay. The poll is disabled. Sorry, hold on 1 second. Might have made a mistake. 1 second. 1 second, 1 second. Okay, I'm going to do it again. Okay, I'm going to do it again. So you can click again. Yeah, all right, Omar, I got that. I've just enabled it again. Okay. I've started to get your answers already. Okay, I can see quite a few that are largely talking about spend and savings and support. Okay, value collaboration. Very good. Okay. All right, let's keep a few seconds more. I see some of you already typing these answers, so I can get these answers. Creating value, yes. Okay, Christiana. Okay. Okay, looks like there is some issue in accessing the poll, but so you can type in your answers in the chat. Yeah. Julia, yes, top line versus bottom line. We will talk about that. It's a good point. Top line versus bottom line. We'll talk about that in a few seconds from now. All right, very good. Okay, a few seconds more and I'm going to close this. Okay, I guess I have got quite a few answers already. So let me close this. Okay. Right. So we have seen that a lot of your answers, and which are absolutely right, are revolving around spend and savings. Okay, this is what we have seen. A lot of the answers are revolving around spend and savings. And we are going to dig a little bit deeper into this because there are plenty of other overlapping areas of interest and hence potential conflicts between procurement and finance that we will dig into. But yes, spend and savings are probably right at the top there. Okay. And we'll also discuss a little bit on top line and bottom line. I think Julia mentioned that, and we're going to see that a little bit more in detail. Okay. So, in terms of role of finance and procurement, the simple definition that I thought might be very relevant. The role of finance here, as you can see, we are talking about, making sure that the financials look good. Okay, now good is subjective, and we will see what do you mean by the financial statements looking good. There are plenty of levers in order to do that. You have the resources, you talk about profitability, you have budgeting, forecasting, funding, and or investing, risk and compliance, right? While in procurement, we are also talking about making sure that you have the right goods and services at the right place, right time, right price, etc., etc. Okay, so basically to have all the good ingredients so that your business can cook well, effectively. Okay, so I thought these were simple definitions of what finance does and what procurement does, and these are the levers that we are talking about, right? Acquiring goods and services for procurement, talking about cost effectiveness, quality, timely delivery from our external vendors, risk and compliance, and also about relationships, right? Now, one of the answers were also about top line and bottom line. Just drawn here, you can see here on the right, a very simplistic income statement. Okay, just the basic lines of the income statement. So we're talking about top line, which is always sales, right? And then here we're talking about the bottom line, which is the net profit or loss or the net margin, right? So we can see typically procurement as a function itself is largely contributing to these two areas. One, cost of sales, and the second is all the indirect expenses, right? So procurement is contributing largely today to the bottom line. Or if you look at the middle, we are talking about operating margin or EBIT. So we, as a function in procurement, are largely contributing to the bottom line. There are some companies where procurement is working also with sales, also with the marketing team, etc., where the the function is a bit more matured, evolved, where there are some contributions to the top line as well. But that is far and few in between. So not too many companies doing that. Largely, procurement is contributing to the bottom line, right? So in terms of when we look at finance, finance is looking at the almost the entire income statement. We are talking also about the top line. How is the sales and marketing team contributing? We are also talking about cost of sales, where you contribute to the gross margin. Then we're talking about control of the expenses, where you're talking about operating margin. This is where procurement is largely involved. Finance also looks at cost of debt. Okay, so the interest associated with it, how the company is being financed, and so on and so forth. And we're also talking about optimizing taxes, right? So a large contribution across different areas. Okay, in the end, this is what we said, that the financial statement. So this is an example of income statement, but we also talking about balance sheets and cash flow statement and equity statements, etc. And finance wants to make sure that they look good effectively. Okay, whereas procurement is largely contributing here to the bottom line of the organization through these different levers. Right. So having said that, we look at how procurement is contributing to finance, and it's a very simple representation in terms of OPEX and CAPEX. Okay, where the contributions of procurement, if we look at one area here, for example, we are talking about a recurring OPEX, okay, where a lot of the focus for procurement is on cost reduction. Okay. If we want to look at recurring CapEx, then there is a lot of talk about how we optimize our cash and working capital and what are the projects that we spend on, what are the projects that we avoid doing today and maybe push it to a later date, etc., in order to manage cash. Right. So this is for recurring. For non-recurring, typically for OPEX and CapEx, I have added largely the on risk and cost avoidance. Basically, how can we avoid? And I'm going to talk a little bit more on cost reduction versus cost avoidance a bit in the next few slides, because that is one large area where there are potential conflicts that come between procurement and finance. Okay. So let's look at the areas of overlapping interests, right, and the potential conflicts that rise because of that. If we look at, I mean, I've just given a few of these activities that finance does here on the left, okay, and then procurement here on the right, and then there are overlapping activities. This is not an exhaustive chart. Yeah, I'm just giving some examples. For example, if we look at finance, finance is talking about investment decisions, they're talking about the budget, the credit risk of the suppliers, a bit on forecasting with help from sales and marketing, right? And which will help in budgeting and investment decisions and so on and so forth. Whereas for procurement, we are talking about market analysis, right? The external view, how the market is responding. We're talking about creating a very strong supplier panel and a portfolio of suppliers. We're also talking about contracting, supplier relationship management, and so on. And then there are overlapping activities, like both are looking at spend and savings. These are the highest that we saw in the poll as well, spend and savings, right? Then there is also stock. Finance might be saying that, you know what, you need to minimize as much as possible our stock because that impacts our cash and hence working capital. Whereas procurement might be saying, you know what, for these commodities or categories, we need to keep a high safety stock, high strategic stock because of certain supply chain risks that it might pose eventually. Okay, for delivery. So there could be some conflicting views there as well. Right. Then there is payment terms, which is also common. Finance is actively looking at it, as well as the actual negotiation that procurement does with suppliers related to payment terms. Then there is savings, of course, one of the key KPIs for procurement, which is savings, right? And it could be also one of the key KPIs for finance in terms of bringing savings to the organization. Okay, so you can see a lot of overlapping activities that we've seen, and then having a clear division of these different overlapping activities, we then try and look at what could be the priorities for the procurement and the finance functions across these different activities. Okay, now I have just mentioned CPO and CFO here. They are representatives of procurement and finance. Okay, not necessarily the person himself or herself, but it's a representation of the function itself. So if we look at some of the priorities here, again, this is not an exhaustive list. I have got 10 priorities, the first 5 here, and the next 5 we'll look at it in the next slide. We are talking about cost management. Okay, whereas procurement might be having a priority to optimize procurement costs, right? Typically contributing to either the gross margin or the operating margin, right? This is what we have seen before. Whereas finance might be looking at controlling overall company expenses, making sure that there's efficient budget allocation and so on. So while it's the same priority, the way in which these priorities are looked at are slightly different from procurement and from procurement and finance functions. Okay. If you look at risk mitigation, again, procurement might be largely looking at reducing the entire supply chain risk. We're talking about supplier reliability, geopolitical issues, and so on and so forth. Here, finance might be looking at financial risk largely, looking at currency, credit, liquidity risk of the suppliers, etc. Okay. Supplier relationships is another important one, whereas procurement might be wanting to foster strong strategic relationships with suppliers. Finance might be looking at ensuring discipline, okay, in payment terms and credit terms, right? And I have seen this in many of the trainings that I do, many of the coachings that I have done in projects. I've seen a lot of conflicts where procurement wants to implement an SRM program with certain suppliers, and they run into conflicts where finance and even legal is chasing certain objectives which may differ from the very notion of supplier relationship. Okay, so there could be, and both might be right in their terms, in their own with their own reasoning, but we would want to make sure that they're aligned, and that is what we will see in a bit. Okay, in terms of innovation, it's the same again. We procurement would want to identify and onboard innovative suppliers, look at their solutions, and so on and so forth. And the money for that would be released by finance. But finance also wants to make sure that there is enough financial stability before financing such activities. Okay. Then similarly, we have sustainability. I won't go through each and every one, but you get the gist. Basically, it's the same priority looked at with different lenses for procurement and finance. Okay, some others here. Digital transformation. It's a key activity I've seen in many companies today, where we are talking about implementing digital tools, e-procurement, AI in procurement, and so on and so forth. Whereas finance would also like to look at their return on investment for digital and financial system transformations. Okay, how beneficial they are, or how do they improve efficiency, etc., etc. Okay, whereas procurement might be the user here looking at ease of use and making sure that efficiency in terms of the work is also increased. Then you have spend visibility, talent development, business alignment, and of course the performance metrics, where you have different types of KPIs for procurement and different types of KPIs for finance. There could be a lot of overlapping KPIs here with respect to spend, with respect to savings, and so on. These are the activities that we have seen which are overlapping. Okay, so we see that these are there are priorities for both these functions. It's just the view that is slightly different with respect to the procurement and with respect to the finance functions. Okay, right. Having said that, because of these different overlaps, we have areas of potential conflicts. And we'll go through some of these areas of potential conflicts. Probably you can recognize some in your organizations that, oh, this did happen to me, at some point of time. And then how can we try and improve? That's the idea. Okay, so just some examples here. Procurement says we have secured a deal that saves us over 100,000 over 5 years. So there's a certain amount of savings involved, etc. Whereas finance might say, yes, you did great, but you know what? You did a down payment for this quarter that impacts negatively our immediate cash and an immediate return on investment. Okay, so while there might be an overall view where procurement is looking at a slightly longish term, finance might be also thinking, you know what, this is great, but it is impacting our short term, right? So there could be conflicting views there. There could be other cases in terms of protocols and policies. Procurement wants to buy something. Finance might say, yes, we can do that. However, there is a certain approval process, right? And this can be a little bit bureaucratic, effectively, and that might delay, and a few conflicts might arise because of that. Okay, so there are quite a few areas like this. We are going to focus on the two areas, on cost reduction versus cost avoidance, as we said earlier, and also on supplier relationships. Okay, there could be plenty of others. Again, this is not exhaustive. There could be issues related to value-added services that procurements want to bring in through contracting. If this results in higher costs, finance might be saying, we need to put a stop to this, right? There is user satisfaction itself, which is vice versa. If procurement is looking for cheaper solutions, they might be cheap, but they may not be very good, and that can destroy user satisfaction, which finance may not be very happy with. There is also a notion of price versus TCO, right? So savings across time and projects. The example that we just saw here, we secured a deal that saves us 100,000 over 5 years. We might be talking largely about the total cost of ownership here, whereas if it's certain, if it's a certain price to pay, we are not talking about TCO, then there's a conflict with the price. Okay, there could be multiple areas of potential conflicts like this. Okay, we're going to look at two of these areas. First, we'll look at cost reduction versus cost avoidance. And this is one of the most common areas that I have seen with different types of clients when I'm doing project coaching and so on and so forth. So purely in terms of definitions, if you want to look at cost reduction, we are talking about hard savings. These are tangible and they reflect immediately in the financial statements, and they are current. Okay, where we talk about cost avoidance, we are largely referring to soft savings. Okay, they are typically intangible and may not reflect in the financial statements. They're also in the future. Okay, again, basic macro definitions of cost reduction and cost avoidance. Some examples that are given here. Okay, let's say procurement negotiates with a supplier for reducing price from 1 year to the next. Okay, well done. You've got some savings, etc. Okay, at the same time, if you negotiate with a supplier to avoid price increase, which we have seen this so common over the last 2 years, suppliers have come back to procurement saying that we're going to increase our prices, and then procurement negotiates to avoid these price increases. However, that is a cost avoidance and may not be reflected as part of the savings. Now, some companies, some finance departments do recognize this as savings. I'm not saying that it's always the case that these are not recognized, but that is an alignment that needs to be done prior in order to make sure that cost avoidance is a part of savings or not. Okay, so this is something which has to be, these are typically the areas of such kind of conflicts that might arise. And as an example of cost reduction and cost avoidance, as I said. Another example is procurement decides to move to a different location for employee cost benefits, whereas another solution could be an investment in the current location to avoid future employee costs. Okay, so that involves an investment, which is a cash out for finance immediately, right? Again, while this is a cash out, we are talking about avoiding future employee costs. Okay, there could be an investment in AI, in machinery. It could be multiple areas of investment to avoid future employee costs, to avoid maybe recruiting a lot of employees because of this investment and so on. So it avoids future employment costs, and this may not be recorded as a cost reduction, and it does not reflect in the financial statements in the future, right? So there could be potential conflicts there. Another example is very classical. Again, I've seen this with many of our clients, which are buying software licenses. So very classical case of cost reduction is when procurement is reducing the number of software licenses granted to the employees. So let's say if there are 100 employees, you have 100 licenses, and tomorrow you decide to make it 75 and optimize it, okay, for these same 100 employees. So you got 25 licenses that are reduced. Now, if you want to optimize the use of existing software licenses, in spite of more employees, that 100 employees becomes 150, and you still keep the licenses at 100. You're still optimizing the use of the licenses, right? But again, it may not be recorded as savings. It might be cost avoidance. So just giving you some examples where these potential conflicts might arise. Okay, and this is one of the classic cases where cost reduction and cost avoidance do bring in some conflicts, right? That's one. The second example that I have to elaborate a bit is on supplier relationships itself. Okay, I've seen this a lot of the times when I do some of my trainings on contracting, where procurement might want to provide some incentives to suppliers for good performance, right? Typically, when we talk about contracts, when we talk about supplier relationships, right, the first thing that comes to mind is what is a penalty clause, but not many would think about what is an incentive clause, right? So in many cases, I've seen procurement wants to provide some incentives to suppliers for good performance, and many times they want to manage the relationships amicably outside of the contract, right, in order to make sure that you have good relationships. Whereas finance and sometimes legal as well, right, might want to impose the T&Cs that were agreed. right? So each one of them might be right in their own areas, right? Finance is saying, okay, we have agreed to these conditions. There is a contract. Let's apply the contract. Very simple. There will be penalties. There will be the TNCs that are strictly imposed on any slight deviation to performance, right? Even though it might not impact business, because there could be certain other KPIs of recovering money, getting more savings, and so on and so forth, right? So there could be issues around that as well. Whereas procurement might want to avoid conflicts, and the primary focus might be to secure supply. Uh, the other kind of behavior might create some conflict, right? And then there is a lot of firefighting that goes around to fix those relationships that we wanted to embark in the first place on. Okay, so you can see some examples here of cost avoidance versus cost reduction. Some areas where you have supplier relations that can be also that can be also uh, that can also come into difficulty because of the different priorities between finance and procurement. All right. So having said all these cases, there are some other examples. I won't go into all these. I just wanted to elaborate those two. There could be areas of budgeting, where it's again very classical case that finance would typically look at what's been spent in the past to predict and plan the future outgoings. Okay, that the budget is based on previous years, let's say, whereas procurement can bring in certain broader perspective. There might be different trends and opportunities that can be happening in the market. There is category management, which can be also this is one area where I have actually seen such impacts. Procurement team might be looking to bring more spend under management in a category, right? Thus hoping to bring down costs because we are talking about volumes. Whereas finance might be using the previous year's figures to set a budget, and that could prove to be over generous. I've seen that typically in the time frame of September, October, November, if your financial year is from Jan to December, right? We have cases where there is budget left on the table. And so businesses are like, okay, let's spend this budget, because if we don't, we might not get this the next year, right? So effectively finance is being over generous, and it results in unnecessary spending, right? This is also the case. So there are again areas where there could be different. The results can be viewed slightly differently. Okay, having said that, we have seen now areas of different interests that are overlapping and that can lead to potential conflicts. Now, what could be some of the best practices in integrating? What are the solutions to this? In integrating procurement and finance, right? So that's where we are talking about moving from silos to looking at synergies. Okay, we are talking about we are so the first thing that I would mention. Typically, I do this in a lot of my trainings. First thing I mentioned that we are all working with one wallet. Okay, we are all working with one wallet. This is the company's wallet. Now, again, we talk about various terminologies which go along with it. We have money from left pocket to right pocket, top pocket, bottom pocket, etc., etc. We have many of these different terminologies, but we are all working with one wallet. And this wallet is what we have seen from the income statement. You have a top line, you have the sales, then you have all the expenses, the cost of debt, the taxes, and then the bottom line, what remains in the wallet, right? So the notion that is very important first is to work on the fact that we are all working with one wallet as a group, okay, irrespective of the different functions that are there inside the group. Then we are talking about some cases where we are talking about aligning the finance and procurement functions right at the top. Okay, so you have the CFOs and the CPOs presenting their objectives, presenting their vision together. Okay, so I've seen that in some companies where there's a good alignment. Of course, procurement is now much more evolved in many organizations. They also have a seat at the board now, so they are talking. Both of these functions are reporting directly to the CEOs. Earlier, it was not the case. We have seen a lot of the times where CPOs are under the finance function, and then the finance reports to the CEO. However, many changes across different organizations. See that now CPO and CFO are at equal standing in terms of the hierarchy. So that is already a good news in terms of aligning certain objectives. More operationally so, we could have a RASI matrix between procurement and finance. And this is what I will elaborate a bit more in the next few slides. Both sides could help each other in understanding each other functions and priorities at the operational level, right? So instead of firefighting and instead of having these conflicting views, we try and uh, and make sure that both sides understands the priorities, what we have mentioned, and the KPIs associated with those priorities, even though you might be looking at it slightly differently. There could be joint policy and protocol documentation, right? So instead of one department writing protocol and policies on their own, there could be joint policy and protocol writing. Okay, so that we're making sure that there's an alignment. All right, so we just elaborate some of these examples. Some of these examples are like dynamic budgeting. One example I've seen with some companies, especially the small and medium scale companies, you could have a dynamic budgeting, basically implementing flexi budgeting, right? So you adapt to changing market conditions. Okay, so you're basically allocating funds based on actual needs rather than the fixed budgets from previous years with a correction, right? So it enables some better resource utilization. In terms of performance metrics, alignment could be done very clearly between finance and procurement on cost savings. For example, we discussed this at length. What could be inside cost reduction and cost avoidance? What could be counted as savings? So we define clearly together what should be counted as savings when we talk about reduction versus avoidance. Okay, because savings is probably one of the common KPIs for both functions. We'll also talk about supplier performance, right? In terms of the different KPIs and quality, in delivery, in the cost itself that the suppliers provide, and so on and so forth. Sustainability is one other area where you could have common metrics. Now with the ESG, we will talk about that in the next slide. But with ESG, there could be again more areas of collaboration between finance and procurement. And the other area is about AI in procurement finance. Yeah, so using AI, very simple example is invoice and payment processing, right? So no touch POs or where you have a optical character reading implemented where supplier sends an invoice and accounts payable, which is typically under finance, is making sure that the match is done and the payment is processed without having to fight much with procurement on the different misalignments that can come in, right? So there are many examples like this where there are some best practices that can be implemented to break these silos. And in order to do that, we could come up with something like this. Okay, to very clearly, so these are some of the areas that we had already seen before. Okay, cost management, risk management, you have supplier relationship management, and so on and so forth. You could come up internally. This is an example of a RASI matrix that I've put in, but it is not necessary that you have exactly the same. I've just put in this as an example. Let's take one example here, cost management. Okay, we talk about that. So jointly identify cost savings opportunities. Okay, so we are talking about cost reduction and cost avoidance, both. How do we use that to have better, to negotiate better and optimize spending? Finance could say, okay, let's say finance is accountable. So I guess everybody's familiar with RASI. RASI is responsible, accountable, consulted, and informed with the RACE matrix. So let's say finance is accountable for this, okay, as an example, and procurement is operationally responsible for this. So procurement will be the one who will be working on these cost reduction and cost avoidance activities, whereas the accountable could be finance. And these could be aligned right at the beginning to say, if I chase this opportunity, which is a cost saving opportunity, it falls under cost reduction and it falls under cost avoidance. Both should be counted as a cost saving result at the end, right? So if we align this right at the beginning, then we are making sure that we are creating much more synergies and avoiding conflicts. Okay, there's one example. Then you have risk management. Okay, risk management, again, jointly evaluating supplier financial health. okay, and mitigate the financial and supply chain risks. Now, procurement could be the accountable and responsible for that, but of course, finance can be consulted as an expert, okay, to make sure that once you have read the supplier financials, or let's say finance can buy certain reports which are available, or they do the analysis themselves and hand it over to procurement, where procurement is responsible to take certain decisions, whether to onboard this supplier or whether to make some action plans with this supplier if the financial health is poor. Okay, so you could already have clearly defined roles to make sure that the risk management is also aligned. Okay, supplier relationship management. We talked about this, actively addresses soft benefits of value collaboration, which is clear. So you're to be accountable and responsible again, whereas finance could be consulted and or just informed. Okay, not even involved in any kind of decision making for supplier relationship management. So, when we know that finance needs to be consulted before procurement can have these joint meetings. When we are talking about launching an SRM program, it might involve certain costs. So you consult the finance team, making sure that you have the right budget for it, but the action plans will be effectively executed by procurement. Okay. And there are many other examples like this. One of the examples, again, could be, for example, here we talk about sustainability initiatives. Okay, now if you have a sustainability or a chief sustainability officer, or if you have somebody, if you have a department on sustainability, maybe finance and procurement both are consulted. Okay, procurement may not be responsible per se, but finance and procurement both are consulted, and the onus accountability might lie somewhere else. So you see here, there's nobody accountable per se. If you have a sustainability department, maybe the sustainability department is the accountable for this. Okay, and action plans are done by procurement, finance can be consulted. Okay, so we are basically trying to align these. There are some other examples here. So contract compliance. Contracts is again one of the classical areas where you could have legal as the accountable. There's no A here, as you can see, legal as the accountable, where procurement and finance are consulted, or procurement can be responsible, where we make sure that there's alignment of contract and financial and procurement policies, and legal can take care of the accountability. Or if you want to say, let's say procurement wants to take accountability, you could change that as well. But that alignment is necessary to create these synergies. Okay, so you have again the different areas, vendor management, payment terms that we talked about. Let's say if finance is purely accountable for the payment terms, the actual operations will be done by procurement. Again, this is very clear. I've seen some companies which have very clear agendas where finance have defined. One of the examples that I've seen, finance has defined 3 or 4 types of payment terms, okay, and procurement has to adhere to these 3 types, and they're calculated before. So let's say 15 days with a certain discount, 30 days, which is normal, and then 45 days with some other conditions, right? And procurement negotiates with the supplier with one of these 3 conditions. Okay, and finance is absolutely okay with that because these are all aligned and predefined. So we avoid any conflicts there. Okay, so the idea is to look at these areas of collaboration. These are linked to the top priorities that we saw before, right? And we can see that these areas of collaboration can be described, who does what in terms of the RACI matrix between procurement and finance, so that we don't work in silos, even though we are looking at these 2 different functions, looking at these particular areas through different angles. Okay, and we have a clear definition of who does what to bring that alignment. Okay, right at the beginning, across all these different areas of collaboration. Okay. Good. So that is what I wanted to share. What we have seen very quickly today is the roles of procurement and finance. And as you rightly identified, we are talking about savings, spend, but not only. There are plenty of other areas where we have alignments, right, and overlapping interests and potential conflicts. In order to avoid working in silos and bring synergies across these different activities, we looked at some of the best practices. And for each of these practices, we are talking about how we can allocate responsibilities and accountabilities across these different functions, basically, to make sure that we are moving away from silos and bring in synergies. Now you can do that as a pilot. I think if you have, if you see, if you identify areas, one of the simplest areas is the cost avoidance and cost reduction, as I said, or supplier payment terms, or contract management, or vendor onboarding. There could be plenty of areas like this where you can do one example as a pilot with clear roles and definitions, alignment with finance, and meeting with them regularly, and see how it goes. So it can be a success, and then you use that to look at these other different areas of collaboration. Okay. Great. So that is what I wanted to share with you today in very quickly, 40 minutes roughly. We talked about all these three different areas, let's say, of the agenda. And now I'll be very happy to take any questions or any comments if you have. Feel free to write it in the chat. I have Fred and Eric, who are there behind, who will be moderating this as well.